Very good evening, friends. A warm welcome for our day 2 evening session of cost and management audit. So in the morning session, we were started discussing application of costing provisions, where we have already discussed it, mainly two things, value addition and also profit reconciliation. So now we will go with the third part. The third part we discuss about financial position and ratio analysis. Financial position and ratio analysis. So I will just share the window. Financial position and ratio analysis. Financial position and ratio analysis. So morning session itself, you have shared the material for that, where if you go through, see, yes, please mute. See, this is what expected from a cost audit report. That is, I am just sharing you how the financial position will come. This will come under Part D, Para 3. It will come under Para 4. Part D, Para 4, which will ask share capital, reserve, long-term borrowing, gross asset, net assets, current liability, current asset, all these data we will take from the audited balance sheet. That means these data we will take from the financial accounts. These data we will take from the financial accounts. Then here we want to compute capital employed and net worth. So how to compute capital employed, how to compute net worth, which is very interesting, that I will tell you. Then we have to find out the financial position, where we have to find out value added, net revenue from operation, PBT. These are all the profitability ratio we have to prepare. PBT to capital employed, PBT to net worth, value added net worth, debt equity ratio. But this is the financial position or ratio analysis want to prepare by the cost auditor. But for our exam, it coming two perspective. Our exam it coming two perspective. That is, in section A, as per rule, we have the provision. In section last, we have management audit, where we have proper ratio analysis. So this ratio analysis is just an extension of your CFM ratio analysis. In your group 2 costing and financial management, you have chapter called ratio analysis, where you have already learned what are the ratio, liquidity ratio, coverage ratio, long-term solvency ratio. So all those will be come under ratio analysis. So this purely ratio analysis question may come. Purely ratio analysis question will come. That is, you can easily able to score purely ratio analysis. Or they may ask you rule-related question. Rule-related question now, basically they will ask like this. What is the percentage of PBT to capital employed, PBT to net worth, PBT to value added? Like that we have discussed in our morning session also. These are all the questions they will test for you for your exam. So two things what we are discussing is what is mean by capital employed and what is mean by net worth. Shall we start? Hope you are ready. So the capital employed is very clearly mentioned. See how wonderful definition is mentioned. So the definition of capital employed is given in the rule. See, in your business valuation paper and all, you might find out the capital employed. But here in rule, which is clearly mentioned the definition. So I will discuss the definition for your benefit. What is the definition? Capital employed means average of, see look here, average of net to fixed asset, excluding the effect of revaluation of fixed assets. That means revaluation reserve will not come. Then plus non-current investment, then net current investment, that both beginning and end. Beginning and end means average. Beginning and end means average. And they tells very clear what is the meaning of net worth. Net worth, they were telling that net worth is defined as under clause 57, that is of the Companies Act. That is Companies Act, what is defined net worth? That is what? Net worth. So that you are already know while discussing the problem also we'll discuss. So the only confusion item is capital employed that we have discussed. What is the capital employed? It is the average of net to fixed asset. Net to fixed asset is what? Those who want to know net to fixed asset, it is gross fixed asset less accumulated depreciation. Gross fixed asset less accumulated depreciation. Then non-current investment and net current asset. So already the question number 8 we have read. So now today we are going to start a standard question where it is asking all the questions. They were asking capital employed, net worth, debt equity, PBT to capital employed. So the question is coming here. See, if you look here, the financial position ratio analysis, they will ask two perspectives. One is in the question they will mention rule. If the question they mention the rule, we have to go definition as per the rule. Capital employed, if they ask, you have to go as per the rule. If the question doesn't ask anything, then it is a part of management audit, which is purely ratio analysis question. That is our intermediate CFO. That is our intermediate CFO. So we will discuss all the different model so that you can be get clarity of that. You will get clarity of that. So we will start this up. Very standard question, very lengthy question, so that all the point can be understood. Question number 9. So morning I forgot to share the Excel sheet. Now both the Excel sheet I will share at the end of the session. So we will start. So first what they were asking here in the additional information they were telling term loan repayable in 12 months. Then what is the PBT they were mentioning. So first they were asking capital employed. So I am here ready. Hope you are also ready. Statement showing computation of capital employed. Statement showing computation of capital employed. So what are all the years we have? See the years we have 2 years, 2015 and 16. We have 2 years, 2015 and 16. So we will start. What will be the first item? See the definition already we have discussed. Net to fixed asset. So you have to find out your gross asset. So what is your gross block? Your gross block 1450 and 1360. This is what your gross block 1450 less accumulated depreciation. Less accumulated depreciation. What is the accumulated depreciation? 630. And here 580. This is what is called net to fixed asset. So what is the net to fixed asset? 820. So we have discussed net to fixed asset. The definition is what? Net to fixed asset excluding the effect of revaluation. So if you look here, there is a revaluation reserve is there. So excluding the effect, we are going with the definition. So excluding the effect. So excluding the effect means what we have to do? Less revaluation reserve. Less revaluation reserve, which is 250 and 280. Less revaluation reserve which is 250 and 280. So what will be the amount, my dear friends? Here we will have 570 and 500. Now, there is an item called capital work in progress. There is an item called capital work in progress. So, what is a capital work in progress? See, capital work in progress is not in our definition. You can just look into the definition. What the definition it tells very clear, excluding the effect of net fixed asset plus non-current investment, net current asset. So the question is not telling about capital work in progress. Since the capital work in progress, it is not there, we can ignore it. We can ignore it. So that's all. Capital work in progress is not there, we can ignore it. Now what is next we have to approach? See, next day, so the first point, gross block, that is the net current asset is over. Now what we have to go for next? Next we will go for, see, non-current investment, that is there in the format. Non-current investment. If you look here, there is an investment is there. So if we, the concept, if you go through the definition itself, it includes non-current investment. Generally, in our BVM paper note for finding capital employed, we won't consider investment held outside the business. But here it is very clear, non-current investment they were making. So we assume this investment which is mentioned as 30 is non-current. If you assume it is a current, then it will not come. If it is a current, it will not come. Only non-current investment will come. The question is silent. We assume it is a non-current investment. The question is silent. We assume it is a non-current investment. So that is the point. So some friends may have some doubt. I am telling we are doing with provisions. We are going with provision. So next is what? Net current asset. So how we will find out the net current asset? Net current asset. First, we will find out the current asset. What is a current asset? The current asset, we have the item. We have to add all the item. The current asset, we have the item. We have to add all the item. So I am here ready. Hope you are also ready. So we can start. So I will give the time saving. We will just add here itself. 834 plus. Sundry debtors is what? 364 plus. Then advance for equipment. My dear friends, capital work in progress we have ignored. Very important point. Capital work in progress we have ignored. Since capital work in progress we have ignored, anything related to work in progress, that is simple logic. There is no revenue you are generating. If you are not generating any revenue, those assets or those expenses has to be ignored. That is a simple logic. So advance for equipment. So the equipment not reach in your factory. So you are not generating any revenue. So you don't want to consider. So advance for equipment, we won't consider. The logic I have told. What is the logic? Because you are not generating any revenue from that asset. It is just an advance. So other loans and advances, it will come 288. And some of the friends already started giving answer. Very good. Some of the friends already started giving answer. Very good. So 882. Next is 390. Advance for equipment will not come. 274. Next will come 38. So the next year total will be current asset. So we want net current asset. So how we will find out net current asset? From the current asset, we will less current liability. So what all the item will come under current liability? Current liability, sundry creditors, capital expense will not come. Same logic, capital work in progress we are not considered. Since capital work in progress we are not considered, anything related to that will not come. So sundry creditors for others will come, which is 370. Provision for taxes will come, which is 128. Miscellaneous expenditure is not a liability, current liability. So those items will not come. Moving further here we will have 394 plus provision for tax 142, which will be 536. So if you minus You will have 1030 here. You will have 1048. So this will be your net current asset. So now we can go for our final answer. What is that? None other than capital employed. None other than capital employed. Yes, my dear friends. What is the definition of capital employed? We have discussed net to fixed asset plus non-current investment plus non-current investment plus net current asset. So A, B, C. So what will be the answer? You have to take 570 plus 30 plus 1030. So they were telling average. So what is the average? We have to take the average. So what is the average? The average will be if you do it 1604. Copy fast, my dear friends. Very interesting. So here one small adjustment is there. One small adjustment is there that I will tell you. There is a small adjustment is there. Before rating, please note down. A small adjustment is there. See, in current liability, one more item will come. In the additional information, term loan repayable in 12 months. Term loan repayable in 12 months. That means it will come under current liability. That means it will come under current liability. Current year it is 192. So those items also will come. Current year it is 192. And here previous year it is 168. Because that is now current liability. We know one concept. Any liability which has to be settled within 1 year has to be treated as current liability. So there will be new item will come under current liability. So this will be the capital employed. We have to find out the average capital employed. What is the average capital employed? Some of the friends already got the answer. So very good. It will be 1614 1424. It will be what? 1424. So make it copy very fast. My dear friends, this will be very important. See, in your online MTP, all the sets say they are asking ratio analysis question. Tomorrow I will give you a MTP compilation also. Tomorrow evening session, I will give you a MTP compilation also. So my dear friends, all that they were asking this. So you can take your own time and make it. So you can take your own time and make it. So we will go for the next part now. What is the next part? I will share you the Excel sheet also, don't worry. So all the online MTP, we have the question of what? We have the question of ratio analysis. Now calculation of capital employed. Calculation of capital employed. I am here ready, we can start. Not capital employed, calculation of net worth. Calculation of net worth. So we will take one by one. So net worth. This is here the data we have to take. So the same thing. We have 2-year data is there. So both the year we have to consider. So the first one, share capital. First one, share capital. We have 600. Debenture redemption reserve. See, as per the Companies Act, all reserve available for distribution as dividend also will consider. So debenture redemption reserve. Debenture redemption reserve. What is the debenture redemption reserve? 50 and 60. Debenture redemption reserve we have 50 and 60. What is next? Capital subsidy. That is also one of the benefit for us. Capital subsidy. So what will not come because revaluation reserve will not come. Capital subsidy we have 60. So what will not be there? Revaluation reserve is a temporary adjustment. So that will not be taken into consideration. So revaluation reserve will not come. General reserve will come. So what is the general reserve? General reserve is what? 320 and 240. General reserve is 320 and 240. What is the profit and loss account? The profit and loss account is 96 and 64. Profit and loss account is 96 and 64. So this is what is called your debt. Total equity. Now less miscellaneous expenditure. We have miscellaneous expenditure. What is a miscellaneous expenditure? 192 and 204. You have to reduce that. You will get your final answer. Some of the friends already got the net worth. That will be 934 and 204. 934 and 820. 934 and 820 is the answer. Some of the friends already got the answer. You can take your own time and copy. So you got the net worth. Net worth is 934. So these type of questions are very relevant. So in the rapid revision, we are not very important, already we are doing. But for time savings, we are not doing all the sums. So now we will move on to next part. So we have done what? Capital employed is over. Net worth is over. Okay. Next they were asking debt equity ratio. So what is first we will do? First we will do debt. Calculation of debt. The term debt means long-term debt. The term debt means long-term debt. So what all the items will come? We have already discussed. Other loans and advances. Here it is there. Secured loan. Secured loan. So secured loan, we have what? 550. See, in this 550 only, 192 we transferred it to current liability. So current liability, if you transfer, the long term will reduce. So what will be the reduction will come? 192 will reduce. So I am repeating once again, 550 is the item in the balance sheet. But there is a note, additional note that 12 months you have to due 192. So that you have to reduce. So balance will be 358. Same thing will come here. 590, you have to reduce 168. So balance only will come. Now after secured, unsecured. What is the unsecured loan? The unsecured loan we have 246 and 234. Unsecured loan we have what? 236 and 234. So we got our total debt. So what is our total debt? The total debt is 604 and 656. Now what we have to do? Yes, you are correct. We have to do debt equity ratio. Debt equity ratio. Debt by equity. Debt is 604. Equity is 1156. So you can make it. Here you have 656 divided by 124. So you can say is to 1. Here also if you want, you can do is 2. So this is how the debt equity ratio for the company. 0.54 and 0.64. 0.54 and 0.64. You can copy very fast, my dear. Yes. So secured loan 550 minus 190. Correct only. So hope you have completed. So we have finished what? We have finished it. First thing what? Capital employed. Then we have find out debt equity. Then we have find out net worth. Now what is next they were asking? Next is PBT. This is what the ratio we have to do. PBT to this we will do only for current year. See. So PBT to capital employed. So now the final thing. PBT to capital employed. So we can start. What is a PBT? PBT is given in the question. PBT is given in the question 160 divided by capital employed. Here we will take for 1 year PBT to capital employed into 100. Here next year, what is the PBT? We have 174 divided by 14 into 100. So, see, you can do the comments, but in online exam, no need of comments and all. Directly the answer only. In online exam, no need of comments and all. Directly the answer only. So, for your benefit, I will write the working note also. 160 divided by 1438 into 100. Next day, 174 divided by 1410 into 100. So we have completed. How interesting. Next, PBT to net worth. What is the PBT to net worth? What is the PBT to net worth? The PBT we have 160 divided by net worth into 100. So I will just make it. PBT is what? 160 divided by 934 into 100. Next day, 174 divided by 820 into 100. So 174 divided by 820 into 100. So we have given the ratio. All are is in percentage. These all are in percentage. Copy fast. See, one small point I will tell you how I will find out the debt equity ratio. 604 divided by 604 divided by, I will just give for all the fronts, I will give all the breakup. 604 divided by equity amount without miscellaneous expenditure. So that amount is 1126. So that is what we have did. So 604 divided by 1126 only we got it. Similarly, the next one 656 divided by 1024. Because here the ratio is for capital structure ratio. Miscellaneous expenditure is an accumulated loss that will come into your asset side. So without considering that, we have find here. This is the total we have taken. Total equity, this is the net worth. Now, how this 358 we found it is, this 358 we found, 550 is in the balance sheet. Look here, in the balance sheet we have 550. But in the lot they were telling 192 is current year. So 550 minus 198. Similarly, the next year they were mentioned is what? The next year they were mentioned is what? 590 minus 168. So hope all your doubts are clarified. Some of the friends was some doubt. So hope all your doubts are clarified. So you can just copy. Okay. Yes. This average capital employed, though we have taken, that we can do only for 1 year. So if you look here the format, average we can do separately if they ask for 1 year. That also I will do. Next question I will do that. See here we were, while preparing our things, we have to do for current and previous year. So since we cannot get 3 years, that is what I have taken each year separately. So now, my dear friends, what we gonna do now? See this type of model question. Management audit purpose, there will be ratio analysis question. More or less same concept only. We are doing for your benefit. So this is purely that I am not. That is in our today material. So today material only. So please complete this. We will go on to the today material. So this is your today material. Here we have those type of questions are. See, look here. Here we have to go for average. If you look here, this is a purely a ratio analysis question where they were asking calculate for the year 1450. See, look here. Here in this question, they were asking calculate as per rule. So if they ask calculate as per rule, very important, latecomers also please listen. If the question they tell as per the rule, then we have to follow the rule definition. If the question tells as per the rule, then we have to follow the rule definition. This is similar question, but they are not asking anything. They are asking only for 14, 15, 1 year. So here we can use the average. Here we can use everything that way. So I know you are ready. This is a purely a capital ratio analysis question. This type of ratio analysis are regularly coming. In your study material, your lot number of questions are there. See, for your benefit, we are doing one consolidated question, which is coming most of the ratio which are commonly asking. So we can start. So this is the question where we have all the information are there. This is also a previous year question. Not one point very important. See, this is not a rule question. This is not a rule question. So if it is a not rule based question, our capital employed will be our normal method. Our capital employed will be normal method. So we can start. I know you are ready. So first we have to find out return on capital employed. So what is the question number? Question number 27. First we were doing return on capital employed. So first we will find out calculation of capital employed. First we will find out calculation of capital employed. So we can find out first net to fixed asset. What is the net to fixed asset? See this question, everything total is given. Net to fixed asset is 3120. Two 2014. Here it is 2400. So net to fixed asset we have done. What is next? Net to current asset. So normal method. Capital employed is average of net to fixed asset, net current asset. We won't consider investment here. So a normal ratio analysis question, investment will not be considered. So what is the amount of your net to current asset? Net to current asset is 1272. Everything given in the question. So for you it is very easy. 1272. Everything is given in the question. So very easy. So your amount is here. So here you want to do the average because 1 year only they are asking. So average capital employed. What is average capital employed? 4392 plus 440 into 100 divided by 2. So what will be the answer? 4416. What is the EBIT? So the formula I will tell you. Return on capital employed. The most used formula is EBIT less tax divided by average capital employed. See, these are all your intermediate concept. So I'm not going to in depth. So I'm just directly telling. So average so this is the formula. EBIT less tax divided by average capital employed into 100. EBIT less tax divided by average capital employed into 100. So what is the EBIT? Look here, they were asking only for current year. The EBIT is here. Look here, the EBIT data is here. Profit before interest and tax. This is called EBIT, earning before interest and tax. See, I already told, investment generally we won't consider in capital employed. Rule definition only we consider the investment. Investment we won't take. Investment normal problem we won't take. In BVM alone you might have been done a lot of problem. We won't take. Only rule based problem only we will take investment. So what is the EBIT? Hope you are clear now. The EBIT is what? 1800 minus. What is the interest? Interest we won't reduce. Tax only we reduce, which is 720 divided by average capital employed 4116 into 100. So what is the answer? 1800 minus 720 divided by 4116 into 100. Take your own time. Some of the friends already got the answer. It will come 24.45% or 46%. Your online MTP question, I will show you tomorrow. Very, very easy question. You will come pakka one ratio analysis question. So please practice all your intermediate ratio analysis question or your study material. I will show you from where you have to study the ratio analysis question, because same intermediate concept we don't want to do. We can do two concept in for final level. For your conference level, I am doing a consolidated ratio analysis question. I will show you. There are a lot of questions are there. Numbers only changing for your purpose. So we will go for next. What is next asking? Stock turnover ratio. So the B part they were asking. Stock turnover ratio. What is a who are all remembering stock turnover ratio formula? Stock turnover ratio is equal to, you are correct, COGS divided by average stock of finished goods. COGS divided by average stock of finished goods. So what is the COGS that we have to take for the current year? COGS is cost of goods sold. See, I will share you the Excel sheet, not worry. See, if COGS is not available, in this question, COGS is not available. So, very, very rarest cases, COGS will not be available. See, I am telling you proper equation. See, if you look here, no other clue you won't get it for COGS. So, if COGS is not available, then we can take for sales. So, please note down, sales will not be taken. Even in formula also, I have told COGS. So, we have to take COGS only. Suppose if COGS is not available, then only we have to take the sales. Rarest of rarest cases only, we will take the sales. This is one of the rarest. I have took it willfully for you to tell very clear. So what is the average finished goods? Average finished goods is opening plus closing. Sir, where I will get this balance sheet? Look here, the balance sheet we have the stock. The balance sheet we have the stock where we will get 1,440 plus 1,200 divided by 2. 1,440 plus 1,200 divided by 2. So the average will come 1,320. So what is the stock turnover ratio? The stock turnover ratio will be 7,200 divided by 5,360. You will have turnover ratio will come in times. So 5.45 times. The answer will be 5.45 times. Copy fast. The answer will be 5.45 times. So what will be the next item, my dears? The next will be return on net worth. See, net worth is belongs to shareholders. So we have to take PAT. PAT divided by average net worth into 100. Return is belongs to shareholders. So PAT divided by average net worth. So what is a PAT? What is a PAT? The PAT, if you look, earning before interest and tax 1,800. The interest is 288. So your tax is 720. This is your PAT. So your PAT is what? Profit after tax. Not the point very well. I will share you the Excel sheet also, because when we are doing very fast, sometimes the working will not be there. So I am repeating once again. Your EBIT is 1,800. Your interest is 288. Your tax is 720. Your PAT is 792. So what is a net worth? Net worth we have to do for the both the year. What all the year? 2015 and 2014. See, net worth is very easy. How net worth is very easy? The share capital. Last case, like there is no miscellaneous expenditure or no. What is the share capital? Last question, like there is no list of reserve under 3,000, 3,000 each. What is the reserves and surplus? The reserves and surplus 1,392 and 1,200. Now, if you look here, there is no miscellaneous expenditure or no. Yes, it is there. So we have to deduct the miscellaneous expenditure. Less miscellaneous expenditure. What is the miscellaneous expenditure? 720, 840. This will be the net worth. So 3672. So average net worth will be what? Average net worth will be 3672 plus 3360 divided by 2. So what will be the answer? 3516. So what is the answer here? 792 divided by 3516 into 100. You will get the answer 22.5%. You will get the answer 22.5% or 532. See, look how interesting. Copy fast. Copy fast. Okay. Now what we will move next? Now next question, current ratio. What is the next question? Current ratio. What is the case? Current ratio. So how we will approach current ratio? Are you ready? First we have to find out the current asset. First we have to find out the current asset. Current asset is nothing but we have to add 1440 plus 840 plus 240 plus 300. I think small typing error is there. 2820. Small typing come down below. 2340. Less current liability. What is the current liability? Which is 1548 and 300. So already the current ratio is given in the question. What is that? 720. Yes. So we can start the current ratio. So current asset, current liability, both we got. So what is the current ratio? Current asset divided by current liability. Current asset divided by current liability. What is the current asset? 2820 divided by current liability. Here current asset divided by current liability. You will get the things. Second company, it is very high. Second year, last year it is very high because the current liability was very less. Now the current liability increased. So current ratio also we have find out. What is the last item? Proprietary ratio. Last one. Proprietary ratio. So how to approach proprietary ratio? It's very easy. Shareholders fund divided by total assets. Shareholders fund by total assets. So what is the shareholders fund? What is the shareholders fund? Shareholders fund is what is the shareholders fund? We can able to make it. See here we are not taken a average. We are done for each year. We are taken for each year. So the shareholders fund is already we found out. So we will do one by one. Shareholders fund. Here both you can do year basis. We have 2015, 2014, 2015, 2014. What is the shareholders fund? This is what the shareholders fund. What is the total assets? The total assets is, what is the total assets? Total assets means 3120. We will consider the assets, fixed asset plus current asset. 2820. And here 2400 plus 2340. So what will be the proprietary ratio? Some friends are thinking the formula total asset by shareholders fund. It is wrong. Proprietors ratio, the formula is proprietors fund by total assets. Proprietors ratio, the formula is what? Proprietors fund or shareholders fund divided by total assets. So we must be very careful. Just going ulta will make your mark loss. So what is the proprietary ratio? So we will do it. Your shareholders fund divided by total assets. Shareholders fund by total assets. So copy fast, my dears. Investment will not take it. Only current asset plus current liability only will take it. Because business analysis only we won't take investment. We will take only current asset and fixed asset. We will take only tangible asset. Current asset plus fixed asset. Okay. So copy fast. Total asset breakup I will give for you. Don't worry. Total asset breakup is 3120 plus 2820. 3120 plus 2820. You can able to copy. Okay. So I hope you got the breakup also. Copy fast. Net worth is equal to shareholders fund. Yes. Net worth, shareholder fund, proprietors fund, owners fund, all are same meaning. All are same meaning. Net worth, shareholders fund, proprietors fund, all are same meaning. Okay. So copy fast. Yes. See, Indumadi, the reason why we are not deducting interest because capital employed includes loan. So shareholder, the return means providers of fund. So capital employed include the loan also. So interest is a return for the loan. Interest is a return for the loan. That is the reason why we are not reducing it. That is the reason we are not reducing the interest. Hope you are clear, my dear. Okay. COGS na cost of goods sold. Lot of friends say, I think I have to take intermediate ratio analysis. My dear friends, you go to the YouTube page, our Bharadwaj Institute page, we have taken in detailed ratio analysis for the CFM class. So you can go and watch those classes. It is very easy for you. You can watch those classes. So you can able to get more clarity on that. Because in final level, if I teach that basic formula and all, COGS formula and all, if I am discussing in final class, the interference will think of it. Sir, what is the final level and all? So COGS means cost of goods sold. Okay. Materials, sometimes they will make it different way. No? Okay, so hope you're all completed. What we will do now? So here I have given, yes. We have to go for that way. But exam purpose, you have choice question. They won't confuse in that way. If you check with that, they won't confuse you that. I will discuss the exam purpose question also for you. So this question now you can do it as a homework. This having all the ratios are there. Working capital is asking. Proprietors fund. What is proprietors fund? I have told you proprietors fund is shareholders fund. Capital employed we have discussed. Current ratios. If you look here, you have a lot of items there. Discount on issue of shares, preliminary expense. Both you have to reduce while finding the proprietors fund. So acid test ratio. What is acid test ratio? You will eliminate the stock. Then proprietary ratio we have discussed now. Fixed asset proprietary. See, fixed asset proprietary, what will happen now? In the denominator instead of total asset. In the denominator instead of total asset, we will take fixed asset allowed. Debt equity we have discussed. Capital gearing, you know, that is external funded to equity shareholders funded. Fixed asset ratio. So you can do it as a homework. Now we will go for another area. So what I am telling now, this ratio analysis is a very important area. If you take all the MTP, there is one question from ratio is there. So I will tell you tomorrow, I will go with your institute material where I will tell you which role the question which is relevant for you. Now already we discussed how to approach. From your study material only, mostly they will test it. So the important page number I will tell tomorrow evening. Important page number I will tell tomorrow evening so that we can able to discuss. Okay. So now with your permission, we are moving into next topic. With your permission, we are moving into next topic. What is the next topic? Here, this is one of the area which you may not be studied in detail. That is the concept called treatment of abnormal cost. The treatment of abnormal cost. So what is this concept? What is this area? This treatment of. So ratio analysis more question, two things. One, you can refer the intermediate CFM class. Two, I will share you the in your cost audit study material where and all coming ratio analysis problem. I will give you the page numbers. Okay, so treatment of abnormal cost. See what is this treatment of abnormal cost? See what is abnormal cost? Anything not normal is called abnormal. It can be any reason. It can be pandemic situation like corona. It can be a flood. It can be a earthquake. It can be strike. So anything which is not normal, those called abnormal. So the cost during those abnormal period is called abnormal cost. The cost during those abnormal period is called abnormal cost. So why we have to learn this concept? The reason why we have to learn is that this item has to exclude while preparing your cost information. So in your ICMA online MTP, there is a question from this area. In your online MTP, there is a question from this area. So how the treatment of abnormal cost? So let me tell the theoretical concept. This abnormal cost has to exclude while calculating the cost of production, and it has to bring to costing P&L. It has to bring to costing P&L. Okay. So we are starting. It's very easy. So two things are there. First point is all expenses during abnormal period are abnormal cost. Fixed cost of non-normal period up to fixed cost of up to normal period also abnormal cost. So while doing the problem, you will get more clarity. We will start it. I have brought around 2 or 3 questions. We have brought 3 questions for your better understanding. All are continuously repeating. All are continuously repeating area. We can start. I know you are ready. I am also ready. We can start. You are the cost auditor of Merlin Textile Mills Limited for the year ended March 31st, 2015. The company had a strike from 16/9/2014 to 19/11/2014. Although the company resumed working from 20/11/2014, normal production was achieved only from 8/12/2014. The expenses incurred on March 31st is given. So this is the expenses for the entire year. Your strike period is 16/9 to 19/11. So this is the expenses of strike period. Calculate the amount in which your opinion should be treated as abnormal cost from exclusion of product cost. So calculate the amount in which in your opinion it should be treated as abnormal cost for exclusion of product cost. So my dear friends, already we have highlighted. Already what we have highlighted? Already we have highlighted that all expenses during abnormal period are as abnormal cost. Then this is normal period also. So from this perspective, we will start. What is the question number, my dears? The question 1. So amount of abnormal cost. Understand very well. If any doubt you ask in the chat box, I will reply. So amount of abnormal cost. In your online MTP also this type of question are there. Tomorrow evening we will discuss online MTP question. Tomorrow evening we will discuss. By tomorrow morning we can finish the normal question. Then tomorrow morning we will discuss the online MTP question. So particulars. So we have the amount. So the first point, this is the one. Reveal that the following are the expenses. So expenses during the strike period. We have already told expenses during the strike period. Expenses during the strike period we have to treat as abnormal. So expenses during 16/9. Please mute friends. 16/9/2014 to 16/9/2014 to 19/11/2014. Expenses during 16/9/2014 to 19/11/2014. What is the amount? 1440. Now the main point. See, if you look here, though 19/11 strike is over, the companies came into normal operation only 20/11/2014. So we have to take fixed cost during 2011/2014 to this also we have to. Normal operation came only in what? 8/12/2014. Your normal operation came only in what? 8/12/2014. So this we have to consider. So fixed cost during this period. So how we have to find out? So fixed cost during 2011/2014 to we have told in our format. This also normal period up to also will be treated as abnormal cost. So that we're going to discuss 8/12/2014. Just listen. We are just starting the answer. Very easy. In your online MTP, such type of questions are there. What is the total fixed cost for the year? Or what is the total cost for the year? What is the total cost for the year? total cost for the year. We have to add 1800 plus 1100. So just add everything. I'm not giving any working. Just add all the cost. 600, 1080, 1320. One second. So 1320, 600. Now we want to get fixed cost. So if you want to get fixed cost, what is the first thing we have to do? Less variable cost. So I will go step by step only. If you want fixed cost from the total cost, we have to reduce the variable cost. So what all the variable cost? Power is the variable cost. What is the power amount? 600 into 90%. 600 into 90%. What will come? Salary and all fixed, yaar. Salary and all fixed. Salary, whether you done job or do not done the job, we have to make the salary. So don't worry, salary and all fixed. Kaam to nahi to we have to make them salary. 600 into 18. Salary is for permanent employees. Okay. So salary is a so repairs 600 into 80%. So only two items. Salary and all will become fixed. Depreciation also fixed. Other fixed expenses also fixed. So I'm not taking time for discussing each point. All are fixed. So this will be the fixed cost for the year. So what is the fixed cost for the year? So if you make the fixed cost for the year, now what we do now, very interesting, less fixed cost for the strike period. Less fixed cost for the strike period. What is strike period fixed cost? This 1440 is the fixed cost for the strike period. 1440 is the fixed cost for the strike period. So 1440. So you will get what? Fixed cost for the non-strike period. Fixed cost for the non-strike period. Now we are starting the main thing. What is the total non-strike days? Total non-strike days will be total days minus strike days. Total days minus strike days, you will get total non-strike days. What is the total strike days? Look here. Your strike is start from 69 to 9011. If I am not wrong, it will be 65. So total 365. If you minus 65, it will be 300 days. So what is the days from 2011 to 2014 to 8/12/2014? We want to know fixed cost for 2011 to 8/12. We want to know fixed cost from 2011 to 8/12. We got 300 days. So what is this date? 2011. Now we will have 11 days. 11 plus 8, if I am not wrong, it will be 19 days. 19 or okay. It will be 18 days. Once again. So normal production was achieved only from 8/12. So 20 to 30, we will have 11 days. 1 to 7, we will have 7 days. So it will be 18 days if I am not wrong. So it will be 18 days. So what will be the fixed cost during the period? The fixed cost will be 4140 is for 300. What will be for 18 days? 4140 is for 300. What will be for 18 days? So what is the answer? 4140. Similar questions are coming in your online FTP. Divide by 300 into 18 days. 248.4. Copy fast, my dear. See, the answer is over. That's all. This is what the total abnormal cost. So this logic is total abnormal cost. The logic is purely based on this point. The logic is purely based on this point. That is what we were discussing. The logic is purely based on this point. That is what we were discussing. So copy fast. Okay. So very interesting sum. Now similar question we will approach. So hope you have completed. Now we will move to next question. Question number 3. This is one of the recent question. Question number 3. We will start. So what is question number 3? Goodyear Automotive, located in a coastal state, had faced an interruption in production during the year 2016-17 due to cyclone and flood. Out of the 303 available working days, the interruption is flood 4 days, cyclone 3 days, damage restoration is 2 days. So total will be what? 4 plus 3, 7, 7 plus 2, 9 days. So the total restoration is what? 9 days. The unit declared layoff during such period on a payment of average of 50% of wage for direct workers. So during this period, the wage is paid for 50%. So those wages are abnormal cost because no production, we are paying the wage, it is an abnormal cost. The damage due to the plant at cost of repair is 87. Fixed out of abnormal cost, deductible for product cost on the basis of 4 to 8. So I am here ready, we can find out. Statement showing computation of abnormal cost. Statement showing computation of abnormal cost. So first will come direct wages and salary. First will come direct wages and salary. So how the direct wages and salary will come? The direct wages and salary will come. Total amount 1230. This is for how many days? They tells in the clear 303 days. Our strike and other thing was 9 days. We are paying only 50%. So I am giving working for you also. I am giving working for you also. I will repeat once again. 1230, that is for 303 days. We are paying for the 9 days. And what we are making, we are not making full amount. We are paying only 50%. So 1230 divided by 303 into 9 into 50%. This will be the direct wages and salary. What is next? Next will be directly the point cost of repairs. This is because of the flood only. So cost of repair. So what is the cost of repair? 87. Now other fixed cost. Other fixed cost we have to apportion. Other fixed cost we have to apportion. So how we will make it? This direct wage. This power will be variable item. So we will take one by one item. So what role will come? We will have indirect wage. What is the indirect wage amount? 740. Power is a variable. We will have depreciation. What is the depreciation amount? 210. The next day, other fixed expense. What is the other fixed cost? 490. These are three items. Financial charges will not come. Why financial charges will not come? Because finance cost is not a part of cost. So here we will write other fixed cost. How the other fixed cost? Direct wage already we have taken 18.6. Direct wage already we have taken. So other fixed cost 1440 is for 303. What will be for 9 days? 1440 is for 303. What will be for 9 days? So what will be the answer? 1440 divided by 303 into 9. We will get the answer. So what is the final answer? That will be 148.04. This is what is called total abnormal cost. This is what is called total abnormal cost. Copy fast. Repair and all already we have taken. Repair and wage already we have taken. Please note down. This is direct allocation. Repair and wage is direct allocation. Other expenses only we do indirect. Because that we have no direct. Okay, some of the friends are asking the question privately, so I am replying to everyone. So understand, some doubt is what? Some doubt is what? Power. Power is a variable item. If you switch on the light only, then only the power will come. If you switch off, it will not come. So those time you won't use the power. So power is a variable item. Variable item, we won't come. See the heading itself, other fixed cost. See here the heading is not fixed cost. Here the heading is expenses only. So power is a variable. That is what we are not considered. So another question, another front is wage will not come. See, wage is fixed only. See, look here. The wage is already given in the question. 1230 for the year. During the lockdown, we are paying 50%. So that 50% lockdown we are treating here already. So wage we are treating already. That is what we are taking separately. This cost of repair entire amount is for this lockdown. This problem, this because of the flood only, this entire amount. That is the reason we are not apportioned. This is for the entire year. Since this is for the entire year, we have apportioned it. But repair is for only for this period. That is what we have taken direct allocation. That is what we have taken direct allocation. So hope all your doubts are clarified. Any other doubt, please ask. Okay. So repeating once again, wage already taken. Power is a variable, we are not considered. Cost of repair only for this period. So we taken full amount. Other expenses are for annum. Since other expenses are for annum, we have apportioned for the days. How interesting. So this is how we can approach the question. So hope you are clear. Now we will move on to next question. Question number 2. Very interesting question. Question number 2. The following data have been available for Sunflag Dolon Limited. Installed capacity, production cost. See, this is a very interesting sum. See, in the last year, the capacity is due to abnormal power cut. So we have to identify that cost. See, my dear friends, here we are approaching one cost. This question, they are given only cost. They are not tell what is fixed cost, what is variable cost. See, from the theory session, we have discussed that abnormal cost will come only the fixed cost portion. So here the question is coming total cost. So we have to split the total cost and fixed cost. So how to split the total cost and fixed cost? How to split the total cost and fixed cost? That we will discuss. We have already learned in our intermediate level. We have already learned in our SCM level. The same method we will solve for you. We can start. So first we will find out what is the question number, this my dear friends. Question number 2. Statement showing calculation of or ascertainment of fixed cost. So we will have the details. 2011, 2011-12, 2012-13. So first we will make the data from the question itself. Installed capacity. What is installed capacity? 250, 250, 250. What is the production? Production in 10. 240, 230, 125. You can make the capacity utilization also. What is the capacity utilization? 240 divided by 250, 96. See, this is what abnormal. The last year it is only 50% because of power cut, all those reasons. So that is only we are now going to identify. So we just start. So what is the cost? See, the question they were mentioned, cost per ton only. Cost per ton only. So we have 1,000, 1,077, 1,660. Now this cost, very small adjustment we have to do. Before applying our intermediate or SCM concept, a small adjustment. This cost including inflation. If you want to approach our costing principle to split it, variable and fixed, our logic here it is, this is a semi-variable item, we have to split the variable and fixed. So if you want to split the variable and fixed, you should know about the base price. So inflation you have to eliminate. So the inflation factor they are telling, what is the escalation first? The escalation factor is nothing but the inflation factor, which is 12, 13. It is 11, 12. Here base is 100. Here we have 105. Here we have 107. So what we will do first, what is the cost per ton at base level? Because if you do base, then only the split can be proper. That is what we do this. So how it will come? So I will just write the equation also for you. So 4 divided by 5 into 100. That is the only thing. So 1660 coming after 7% increase. So what is the 100? 1077 coming after 7% increase. So 1051. So we brought the number. So you can make the round off also. You will make the round off here. So what will be the round off? I'm just making the round off. So this concept is very clear. 1077 is coming after 5%. I will repeat once again. 1077 is coming after 5% increase. So if 5% increase is not there, what will be the amount? So reverse calculation. Now we are applying our costing concept. Just listen. Once you listen, you will understand. See, what is the total cost? Total cost is equal to point number 6 into point number 2. See, this is what called cost per ton. This is what called production. So here you have cost per ton. This is 10 because this is not total cost. You can get your costing principle only if you have total cost. So this is per ton cost. This is your production. So we have to multiply. So 1000 into this thing. You get the answer. You have to. So what is your costing principle? Variable cost per unit equal to or per ton equal to change in cost divided by change in cost divided by change in units. The same concept only we are applying. So what is the change in cost divided by change in units? We are doing variable cost per unit. Here the unit is what? 10. So variable cost per ton. So change in cost is 240 minus 235. 240 isn't very well. For the benefit of everyone, I am repeating very slow here because here you will have doubt working under. So this 2 level difference. What is the 2 level difference? 240 minus 235 divided by this 2 level difference. What is this 2 level difference? 240 minus 230. 240 minus 230. So 240 minus 235 inward form divided by 240 minus 230. It will be 408. Once again. Okay. We will it coming some small. It has to come once. So one small correction, let me tell you. One small thing. One small calculation correction let me do. One small calculation correction. One small calculation. Okay, my Excel is having small problem because I took the number now. We will go for like this 1026 into 230. My Excel is having round off correction. So I will just go like this 1026 because I have done already round off because Excel it is not making round off. So I'm just making here. Here it will come same. So what is the variable cost? We have to make it difference. Divided by 240 minus. You will get 402. My dear friends, you can look at each case, you will get 402 only because we know variable cost per ton will always be same. You can take any level. You can take this difference also. You can take this difference also. You will get close to 402 only. Because of round of small change will come. So your variable cost per ton is this simple. So we will go to the main point. See, what will be the fixed cost per ton then? Your total cost is 6 minus 8. What will come? $598 here. If you take here you will have 624. Here you will have 1149. So this will be the fixed cost per ton. Because the total cost we have here. So from the total cost, reverse calculation. This is you have done a lot of problem in your intermediate, same concept only. From your total cost, we are just taking reversal. So 1551. Here you have variable cost. If you take the difference, you will get fixed cost. Now the main point, this is the fixed cost at 100%. So what we gonna do now? What is the fixed cost at 100% capacity? If you go for 100% capacity, what is the fixed cost? 592 into 96 by 100, which will be 574 or 574. So now we are starting the main point. We are going to the main point. 2012-13, we have what? 2012-13, we have power cut. What is the actual fixed cost per ton for actual fixed cost per ton for 2012-13, which is 1149. Now listen very well. We have done the apportionment. See, we got the total fixed cost. We got at 100%. That is 100%. It will come down. So what is the fixed cost at 100% capacity utilization? If the capacity is utilized 100%, we have found the fixed cost. It will be 564. So what will be the abnormal fixed cost, which will be 1149 minus 574, which is equal to 575. So what is the total abnormal fixed cost? 575 into 125 is the production we have. 575 into 125 is the production we have. So 575 into 125, which will be 71,875. Which will be 71,875. So my dear friends, you can take your own time and copy. I will tell once again, this is a standard one of the previous year question. Lot of time previous year question. This entire logic is what? You have your installed capacity. This 402 breakup I will tell. For the benefit of everyone, I will tell the 402 benefit. Variable cost. This is the formula I have given. So variable cost per ton equal to change in cost. 2,40,000 minus 2,35,980 divided by 240 minus 230. This you will get it 402. It is a round off number. So we given this. So 402. The entire question, see last question and all, fixed cost we can select. That is a different problem. Last question, fixed cost you will get it. See if you approach here also, you will get the same answer. Because of the round off, there will be small number change. I will show you. If you take this difference, you will get the same number. I will show you. If you take this number, you will get the same number. Look, listen here. If you make this, I will just 1551 into so see it is close to 401. That is small round off change only. It is 402 only. So it is coming, it's round off correction only. You will get it. See this 574 I told the working. 574 is something. 598 into this is 496 400. That is only. That is your capacity utilization is only 96. This 598 is for 96. So what will be the 100? So capacity utilization it will come reverse way. That is what it will come. Simple logic. If it is for 100, it will come down. That is the reason. Okay. So we have completed those point also. So we have finished this. So hope you have completed. Now we will move on to next concept. What is the next concept we have to take it? The next concept we have to take it. Waste multiplier, a small concept. A small concept. Waste multiplier. A small concept. Okay, waste multiplier concept. Where it is. Okay, waste multiplier I don't bring it. Okay. So what will happen now? The next concept we have to take it is CAS, Cost Accounting Standard. So those cost accounting standard question, the CAS, we will discuss in a fresh mind tomorrow morning. I thought of taking that waste multiplier now. Sir, it is in the last page. It is. Where it is? Yes, yes. So no. We have waste multiplier. It is this. So I know I have taken the topic. So very small point. We will start it. Very interestingly, one small point we will discuss. Okay. So question number 25. Question number 25. Yes, Sriram, it will be same. Sriram, your doubt is correct. Variable cost will be same. We have got yes. Sugu, yes, it is correct. By 90. No, it is correct. It is wrong. It is unit only we will do by 96 into 100. Capacity percentage reverse calculation because already percentage. We have to do ulta. Otherwise, simple concept. If you produce lesser unit, variable cost per unit will increase. If you produce more unit, it has to reduce. Simple concept. Okay. So we will move with the CAS waste multiplier. A very simple concept. See, calculate process waste. See, as per the new pattern of exam, how they will ask very rare chance. How they will ask very rare chance. But still we will discuss for your benefit. Very interesting. They will ask for online also, but the chances are very less because essay model and all they cannot ask. I went through, I think there is no waste multiplier question, it is not here. So we will just share you we will just discuss the 25th question, very easy. We can start. Question number 25. So I will just start the point. See this waste multiplier, what it means, why it is used, I will tell everything. That is, I just copy the question first. I will just copy the question. So what is waste multiplier? What is the meaning? What is the concept? I will tell at the end. So first I will just copy the question. What is the process? The process, blow room, carding, draw frame, drawing, ring frame, reeling. Yes. So what is the input we have to make it? What is the output also? Input output we have to just give it. $46, $72, $560. 42, 58, 270. Carding. I'm just rating the question only. I have not started the concept. Don't worry, we will start the concept. I'm just writing the question only. Carding is what? 42, 74, 360. 39, 76, 400. 39, 48, 240. 39, 01, 800. 38, 74, 120. 38, 31, 500. 39, 11, 640. 36, 41, 740. 36, 35, 400. 35, 880. So we can just start. So I am not made anything. I just copied. So if you look this data, you can understand very clear that. If you look this data, you can understand very clear that from your input to output, there is some loss. This is what called process-wise loss. Input to output, there is some loss is that. This loss is called process-wise loss. So what is the loss? The loss is nothing but this is your input, this is your output. Into 100. This is your input, this is your output. 8.86. This is the loss. This is the loss you are having. Okay. Now we are discussing the main concept. See here, what will be the output? We are just making what will be the output. Very simple. Assume input as 100. So if you given 100, what will be the output? Next step. Let us assume 100. This is the each process loss. This is the each process loss. Let us assume your input as 100. What will be the output? See here, there is a loss of 8.87%. 8.87%. Yes or no? There is a loss of 8.87%. So if you reduce the 8.87 loss, the output will be 91.1. I will repeat once again. 100 we assume. 100 is a number, it's an output. We assume it as 100. From this assumption only we can start the working. So we assumed as 100. If 100 the first two process, if you have a loss of 8.87, the output will be 91.1. Now next day, 91.13 we got the output in the first level. Next level if you go through, there is a loss of 6.97%. So 91.93 is the unit minus 6.97. What will be the output then? It will be 84.7784. We will make it into 2 decimals. So I will repeat once again. This 91.413, how you go? 100 minus 8.87. Here 91.13 minus 6.97%. Now here what will come? This is your output. You have to minus what? 1.18%. You have to minus 1.18%. So you will get what? 83.78. So I am telling how we are making the output. That alone you should understand. Then after finding the waste multiplier, I will tell the point. What means by waste multiplier? What is the use? What is the benefit? Everything I will tell you. Now next what we have to do is, this 83, we have to make it 1.1%. So what will be that? 80. Next step, the same process, 6.9%. So everywhere we have to take percentage because this loss is in percentage. This loss is in percentage. So you have to take it in percentage. Since the loss is in percentage, you have to take it in percentage. Last but not the least, $75.98. Now we are going to do the main thing, waste multiplier. What is the waste multiplier? We are starting. What is the waste multiplier? We are starting. Listen here. It is 100 is the output here. Your final output is 75.98. If 100 we given as an input, your final output is 75.98. Otherwise, we can say it is 1.316091 times. The balance is a loss perspective. That is, if you want one output, it is a waste multiplier is, there is a each process we have lost. If you want one output, the input we have to give 1.3079. That is, it tells the input-output ratio. I will tell you one example. Exam purpose, nothing is required, but I am giving you clarity. So I am giving this is what input-output ratio. So this is very simple. You have to make it what? This is point number 1. This is 2. This is 3. This is 4. This is 5. So point number 5 divided by the last output which is 75.98. That is what we have to do. So same thing, we have to divide with the same thing. So if you do, you will get the waste multiplier. So the answer is over. Now, I will tell what is this use practically. Being a cost accountant, what will be the application we will get it? What is the benefit that I am going to do? See, let us assume, I will tell this assumption. What is going? Let us assume, I am telling this practical concept. Let us assume you want 25,000 finished goods. Since each process there is a wastage there, what is the input given in, let us take any one process, draw frame. I will tell you. See, you want 25,000 as the finished goods. What is the input given? Very difficult in the traditional method. So you have to come into draw frame. Just before the draw frame, the waste multiplier number is what? 1.1157655. Yes or no? So what we have to do? The input, I will prove you now your answer is correct. The input is what you have given. The input will be 25,000 into. The answer we got here, this is. Now we will prove this is correct. Listen here. You just listen here. What is the loss in draw frame? Draw frame, what is the loss? Each process we will identify the loss. Draw frame, the loss is 1.18%. 1.18%. Yes or no? So this amount, this will be reduced. Now next is rowing. What is the rowing, the loss? Rowing, the loss is 1.10%. You got it? See, I am just reducing the loss. After the rowing, next is ring frame. I am just giving you the clarity. Ring frame, what is the loss? 6.9%. So what you will get it? You got 25. Last, reeling. What is the reeling loss? Which is 1.5%. See, look here. If you minus this, you are getting exactly 25. That means if you want 25, what is the input you have to give this will be? Suppose if it is not draw frame, if it is a rowing now, we have to take the, instead of this, we have to take the waste multiplier. So that multiplier will change. That multiplier will change. So I will share you this recorded for you. Whatever we take in the class, we will share you the recorded. Since your exam purpose, this nothing will ask. This exam purpose, nothing will ask. But I want you to understand. I want you to understand the concept. That is what we have discussed in this example. So no need of repeating once again, because some friends say will get more clarity because I'm using this Excel, some problem in calculating. So you can take for any number, you will get it. For if you want, if you go for ring frame, we have to take for this number. If you multiply, you will get the same. Let us assume instead of 25, if you make for 10,000 also, you will get same thing. So we have completed this concept. Exam purpose, they will ask either maybe this any one particular year multiplying factor only. But MTP, they not ask any question. This is also similar question. Already the percentage of input is given. So you can do it as a homework. So tomorrow morning, we are now, our rule related problems are over. The 27 is came working, I will tell. 27 I have given already. 25,000 into. They are asking draw frame. So draw frame just before is this. Yellow color shade I have given for that purpose. But anyway, I will show you. This is the multiplier. That is what. This amount of 27 is K after multiplying with the waste multiplier. That is a use of waste multiplier. So if you get the waste multiplier, you will get clearly what is the input to be given in any level of production. What is the input given on any level of production for a desired output. So we have completed So we will share you this video also, so you can watch it and make more clarity. So hope your studies are going well. Tomorrow morning, tomorrow is a Sunday, time I will update. So tomorrow class already uploaded in the YouTube. I will check with the admin also. So what I am telling now, tomorrow morning we will discuss CAS, cost accounting standard, problem related. So I have already shared the material. So in this material, if you go through, we are discussing not only CAS problem, we are also discussing general problems of labor, general problems of cost sheet and all, for your better understanding. So once we complete it, then we have only theory area will be left in. So we will meet tomorrow morning. Tomorrow morning, preferably by the same timing. Today we started by 7 a.m. The same timing only we will start. So the same material. So we will meet tomorrow morning. Hope to meet you all. We are winding up today's session. Any doubt, please ask in the chat box. We are happy to help you. Any doubt, please ask in the chat box. We are happy to help you. Come on. Record we will provide. Don't worry, record we will provide. Record will be available. Okay. Theory, I will discuss the important area, how to approach. Theory, I will discuss how the important area we have to approach. Any other doubt? Okay. Yes, Hindumadi, correct. This can be used for anything where you have process loss is there. Sequential production process weakness. Correct. Correct, Hindumadi. So hope no other doubt is there. All are we are clarified. So happy to meet you all virtually today. So we will discuss in detail in the next class. Okay. So anything else? Thank you. Sir, fixed cost 100%. Yes. Reverse calculation. I told you, Nasugo, it is a percentage. So we have to do divided by not we have to do into 96%. So this is a rapid revision. How the answer only we can give. Because in regular class, we will go for what? Example, all those things. Because if you start discussing example, it will take another 20 minutes. So for exam purpose, how to approach, we have told you. You can able to. So thank you all. Thank you. So hope you are clear. Okay. So looks no other things. So we will wind up. So wish you all the best. Take care.